Hey everybody, happy Sunday and welcome to another episode of the Trading Pit. We have 4 segments as always. First segment is going to be Proving Ground with DejaBrew. Second segment is going to be the broad market recap as always, looking at SPY, QQQ, IWM, and VIX. Third segment is going to be Talking with Traders, and we have a special guest, Howard Lindzon, to go over some of his different ways that he looks at the market. And then segment 4 is going to be Weekend Chart Requests. Let's get started. Alrighty, everyone, into segment 1, Proving Ground. We have special guest DejaBrew, and he is the founder of OasisTrading.io. And Deja, thank you for joining us today.
Thanks for having me.
Hey, you're very welcome. So before we jump into some of the ways that you really like to utilize TrendSpider, can you tell us a little bit about your history trading, how you got into technical analysis, and what you currently trade?
Yeah, so I actually got started really young. I got started at the age of 16 on paper trading apps. I was pretty bored in school. I liked trading. I wanted to get into it somehow. So I started trading on a few apps. I think the first one was called like Stock Wars. Did that for a couple of years. Noticed that I was pretty good at it, but it was all fake money. So then I started trading live at 18. I started trading penny stocks, and then I went on to trading futures for about a year or two. And then I went on to crypto in the 2017 boom. And all that came down to trading options now. And now I'm live trading options basically 5 days a week, every day the market's open.
Nice. Did your kind of transition to the market start just because a little bit of that crypto kind of just momentum died and the market really had that volatility?
Yeah, exactly. So I was basically looking for momentum in moving from stocks to crypto. And then we had that big boom in 2017. Then it died out in 2018. So then I kept trying to trade the chop, and it wasn't working. So I wanted to go back to a few different strategies that I had for equities. And I figured, why not do options? Because it's more leveraged. I can make more money. And that's kind of how I got back to options.
Awesome. Well, I know you like to use the scanner to scan for potential plays on the common stock side, which then will kind of go into the options trade. So would love to see some of the scans you like to use, and let's get started.
Yeah, I've got a few that I actually like running. Most of my strategies when I'm doing options, since the market is so green right now, stocks only go up. But most of the scans I look for are like momentum, like bull flag finders, buy zone reversals, stuff that's looking pretty good long term. And then it starts to pull back. My number one that I always look through basically almost every day is the bull flag finder. And I'll search this one through like S&P 500 and through the NASDAQ. And I'll look for things that are actually looking like bull flags. So sometimes the scans will find it and it'll be a little choppy, but most of them will be pretty good. Let me see if I can find some examples. Like EA is really good. We actually talked about this one today in my group. eBay looks really good. And the way that I built this scanner is I'm looking for things that are basically trending up for 7 candles, and then they are pulling back for the past like 3 candles, and then they are above the 50 moving average. So using the moving averages and just the candle closes, you can kind of build out a bull flag. You could probably make it more exact than I have it, but it's good enough. The second scanner that I like to look through, it's very similar. It's called the pullback scan. This one looks for basically the same thing, kind of like bull flags. It looks for things that are trending above the 50 moving average on the 4-hour, above the Ichimoku Tenkan line on the 4-hour, but it's pulling back on the 1-hour. So this is more of a midterm scan. And you can see a couple of these companies like KHC, Cisco, they're uptrending, but they're pulling back slightly. And then my last one that I do a lot is the buy zone reversal. So this one it's actually showing up a lot of airlines right now, which is perfect because you can see that they were uptrending, but now they're pulling back to the moving averages. So what I call the buy zone is in between the 21 EMA and the 50 SMA. So if it's in between that zone and then it starts to bounce out of it, that would be what I call the buy zone reversal. And then this scan this is the confirmation scan. So this will find them once they're breaking out of the zone. I also have the normal scan that will find them when they're in the zone. So you can get ready to play that dip.
So you pretty much just use 3 different moving averages as your main kind of, I guess, kind of levels to watch?
Yeah, moving averages, the Tenkan line on the Ichimoku, which is basically a moving average, and then just candle closes for the most part, because you can really build some complicated stuff with just using those simple mechanics.
Beautiful. So I was curious. So is there a particular reason you use those 3 moving averages? Are those just the ones that you kind of started with, or?
So I've messed around a lot of moving averages throughout the years of my trading. And the 50 is just kind of like a staple that a lot of traders use. They either use the 50 EMA or the 50 SMA. I've actually been using the 50 SMA on my options and equities trading recently, and I found that it's actually a lot better for my systems than the EMA. I actually use the 50 EMA in crypto, but I feel the simple is better in stocks. The Tenkan line, I'm a big fan of Ichimoku. So anybody watching, if you guys are looking for an indicator that's really solid for beginners or even advanced traders, Ichimoku is definitely a great system to learn. I love that it looks at the high and low data and then it gives you the median. So it's giving you kind of the middle of the past 9 candles. So that's kind of like my short-term trend. And then I like the 21 EMA for like my midterm, because once again, that's a staple number that a lot of traders use. They like using the 21 SMA or the 21 EMA. So it's just kind of the well-known moving averages that I've tested out that work for my trading.
Makes sense. Yeah, what you were saying about, everybody kind of uses a particular moving average really kind of comes down to the self-fulfilling prophecy. Enough people are looking at something, then you get a self-fulfilling prophecy, whether that's selling or a breakout. So that's really cool that you're using some of those. As far as kind of using the scanner, are these scans that you change up at all, or are these pretty much solid across the board? Like, for example, if you're looking at maybe a more volatile stock versus something that's a little more just stable and smooth, do you change up the moving averages, or are these pretty much universal across the board?
They're pretty universal. I like looking for basically I run the scans and then I'll kind of see what the stock is doing inside that scan. And then if, for example, like if I found something inside the bull flag scan and it looks like it might be getting picked up on another one of my scans, like maybe a shorter time frame pullback scan or a shorter time frame breakout scan, then I'll run those. So like I have this 50-minute breakout scan that looks for things using the Ichimoku Tenkan line, so the crossovers. And if I ever see something that is in this scan that I found in my other scans, like the pullback or the bull flag, it's usually a good stock that I need to be keeping an eye on or getting in either that day.
Makes sense. So that was going to be my next question. So this is the one that you just had, the bull flag finder. Do you ever change up the time frames on that as far as kind of looking at on the shorter term time frame? Or are you really more worried about kind of that longer term bull flag forming?
So if I'm trying to get day trades, so if I'm trying, most of my money is made buying the close and then selling the open the next day because we're in such a bullish market. So I typically like to run it on the daily first. If it doesn't give me anything that I like, and maybe this is sometime in the morning, and I'm looking for something that I can trade maybe in the first hour, maybe like after lunchtime, then I'll bring this down and I'll lower this to the 4 hour. Then I'll kind of go by each time frame. So I'll go from higher to lower, 4 hour, 1 hour, 15. And it will typically find things that are still holding that pattern, like that bull flag pattern. You can see even on the 1 hour here on my chart, it maintains that pattern throughout the lower time frames. It really depends on how I'm feeling for the day.
Beautiful. And I see that you scan through the S&P 500. Are you open to pretty much trading anything that has the signal, or do you kind of follow a few stocks and then you kind of rinse and repeat, that type of thing? How does that work?
So because I'm trading options, if I find a chart that I really like, I have to go check the options chain, because if it doesn't have very good volume, or the spreads aren't very good, I can't trade it. So a lot of times, Wayfair is a great example. I saw Wayfair, I think it was on my bull flag or my pullback scanner last week, and the options on this are just not very good. The spreads are bad, and the open interest is not as good as I would like. So I'm open to trading really anything on the S&P or the NASDAQ that have decent options and good volume.
Yeah, that's the worst feeling when you find the perfect chart. You're like, oh, I can't wait to buy calls on this thing, and the spread's like 50%.
Yep. It was Adobe was another one. Adobe came up on the almost every time I run the bull flag scan or the pullback scan, Adobe is on there throughout this entire push up. But if you look at Adobe's options, they're not very tradable.
Interesting. So are you using any type of like options flow instrument as on top of the scan, or you're just going into the options chain to make sure it's liquid?
So I have a bunch of scanners from Trade Ideas that do like call volume, and I've got like high day scanners and stuff like that for more of my like intraday trading. What I typically do with TrendSpider scanners is when the market's closed, I will go run my scans, like say around this time, 6 o'clock at night, 7 o'clock at night. I'll run my scans, I'll make a watch list out of them, and then I'll keep those on my list for the next day. And then once I get to that point, I'll go look at the options chain, and if it's bad, I'll take it off the watch list.
Makes sense. Got it. Well, that's really great information. So you mentioned that you do intraday trade as well. When you're intraday trading, is that mostly common stock, or is pretty much everything you're doing right now options?
Pretty much everything is options. The last time I took an actual stock trade probably was 6+ months ago. Almost everything is options at this point.
Cool. So for those that are watching and are, curious about what you trade, what's your favorite stock to trade that has the most liquidity and not a huge spread to work with?
We've been trading the big tech stocks a lot recently. So Microsoft is probably one of my biggest gainers because the options chain is fantastic. It has great volume, great spreads. Basically, any expiration you want to look at, it has some kind of tradable strike. And tech's been exploding recently. So it's been very easy to buy Microsoft at end of day or get in maybe in the morning and look for a pump. So yeah, Microsoft, Apple. We actually made the highest gain we've ever made in the group so far was Tesla. We actually, as a group, made over $100,000 on Tesla on this last move here. And this was all from the scanner on TrendSpider. This came up on my, I think it was the bull flag scanner. So if you look at this little move here, I'm not sure, can you guys see my screen?
Yep.
Yeah, so the 4 hour, this little bull flag here, I think this was Friday, I believe. It had that 4 hour pullback. This came up on the bull flag scanner. We got in it, and it just absolutely exploded in these contracts. I sold actually really early. I bought them at 250. I sold them at 710, I believe. They went to $63 a contract. That's $6,300 a contract in just one day.
Wow.
Yeah. It was massive.
Wow. Okay. Well, we really appreciate you coming on and telling us a little bit about this. Can you tell us a little bit about your community and what you kind of the overall daily routine you guys do in case anyone's interested in checking it out?
Yeah, so the Oasis Trading Group, we have a lot of educational stuff. We've got videos and private streams and indicators and everything. But our main bulk that we do with our new members is we have an Oasis options section where every day from start to finish of the market, we're live trading options. We post all of our trades. It's me and my main trading partner, JMA 1087, I believe, on Twitter. But yeah, we live trade the entire session. We post all of our trades. We do analysis for members, that sort of thing.
Beautiful. Well, if anyone's interested, make sure to check out oasistrading.io. And Deja, we really appreciate you coming on and sharing some knowledge about these scans. And if anyone would like to check them out, make sure to reach out. Your Twitter handle is just at DejaBrew.
DejaBrew Trades.
DejaBrew Trade. So you guys have the information. If you want to check it out, it's there. And thank you so much again for joining.
Thank you for having me.
All right, everyone. Segment 2, broad market recap. But before we get into the broad market recap, I do want to, one, give a huge shout out to our dev team for making an awesome software update over the last couple months. We finally released it last week, and you can actually find that in the sidebar here. So the top right corner, click sidebar, add or remove widgets, and then click this add widget here. So you can see we have analyst estimates that are new. We have a news feed that is also new. And then we have seasonality. So let's click on all three. We have seasonality, analyst estimates, and news. So when I click done, you'll see all of these things pop up. Obviously, SPY, we're not going to have any analyst estimates on this. But you can see in the seasonality tab, this is really, really cool. You can see throughout each month how SPY does. So notice here, this 79% means that in April, over the last 20 plus years, 79% of the time, SPY has traded positively during April. That is really good information to know in case you're looking at seasonals and looking at that type of movement in the market. And then also, if you are a fundamental trader and like to use news within your analysis, you can check out the news feed below. We will do an analyst estimate example here when we do go into the chart requests in segment 4. So that is that. I'm going to turn this off and jump right into the broad markets. SPY, we have a nice rounded bottom forming on the daily here, really kind of having trouble breaking this previous resistance. That's just a horizontal line pretty much. But then on the weekly, what we have this really nice bull flag breakout that we've been talking about for the last couple weeks, finally continued after a little bit of a pullback earlier in the week. You can see that this volume shelf from the anchored volume by price from this March 23rd low, you can see that this is really acting as almost a launch pad into the week ahead. And we'll just have to see if this actually holds up going into the end of July into August. Going into the Qs, we have something really interesting. We've got this really tight ascending wedge forming here. And the reason why these are curved is because I drew these on a linear chart. So notice here when I turn this off, they're straight. And then when I turn the log back on, they'll curve. But essentially, you can see we are really respecting this support level here since the bottom, which was in March. And we'll just have to see if this thing continues to respect these areas. If so, it may be a good idea to put an alert at this line above. We could put it for, let's say, about medium sensitivity here. So whenever the price touches this line above, and whenever the 10-minute candle closes in that purple area, we'll be alerted. So we'll name this resistance. We'll have it expire in, let's say, 10 trading days, and the alert's created. So now I don't necessarily need to be watching the Qs into next week. I have the system to watch this area for me. So on the weekly, we do have a really cool example using Fibonacci levels. Notice that we almost hit this exact 1.382 extension here. And, we'll have to see if this is something bigger or, if this is just another one of these. Notice that we've had a few weeks where it just looks horrible and then we keep moving up. So is that going to be the case? We'll have to see. The weekly versus the daily is showing a little bit of a difference here. Going into IWM, we can see that this is showing a massive cup and handle here. If you want some tea and crumpets, go to IWM. That is where it's at. You really are not going to have a change in the status quo until we break out of this resistance level here. So until then, we're kind of chilling in this handle. And it doesn't mean that we're going to break out, but this is definitely a formation to keep an eye on. And then, of course, with IWM sometimes lagging the market, we do have this bull flag breakout kind of taking its time. Notice that we're not as far along on the launch pad as we are in SPY. So will this continue up into next week? We'll just have to see. Last one I'm going to go over is the VIX. And, this one's interesting, right? We have been looking at this symmetrical triangle now for a long time. And finally, we got this breakdown. So we'll have to see if this is something to keep in mind into Monday or if this is just a fake out. But notice how many times the price respected this line. And I had a question on Twitter on Friday essentially saying, is VIX worth putting trend lines on because it's a mathematical formula? Well, as you can see here, yes, it respects these trend lines. And, I'm sure that we're not the only ones that have a trend line here. And so this is a big deal to see that this finally breaking down. So all in all, next week is very interesting with the VIX breaking down and SPY kind of gaining some momentum at the end of the week. And we'll just have to see what happens. And let's move on to segment 3.
Hi, everybody. Dan here with TrendSpider, and this is Talking with Traders, a segment that I host here. Then today I have a very interesting and special guest, Howard Lindzon, the co-founder of StockTwits and so many other things, a principal in a trading fund, a published author, and currently a VC. Howard, welcome.
Hey, buddy.
Hey, it's good to have you on, man.
Good to see your face. It's been a while. It's fun to see you guys growing. You guys are doing a great
growing.
job. Yep, you guys are doing a great job.
Yeah. How long has it been since I've seen you in person? I feel like it's been a while.
Maybe Chart Summit with JC.
Yeah, it was like 2 years ago.
Yeah.
Time flies. It's crazy.
Yeah, we hit it off right away.
So, well, really cool. Thank you for being here again. I think we could start off. I usually ask everybody this. How did you originally stumble into the world of trading and stocks and investing?
I think like a lot of people back 30 something years ago, it was you get called by a stockbroker, you get cold called, you end up on some list, and I think that still kind of happens today, but it's via text. But I got cold called. I got pitched a stock, clearly Canadian. It was kind of like just a beverage brand and out of Canada. I lived in Toronto, so I was at a Vancouver stock exchange. I think I still remember the ticker, but it went to zero, put it that way.
Okay.
And that was my indoctrination into the market.
Nice.
Yeah.
And how'd you go from that? I know you at one point ran a fund, an investment fund. How did you go from that to managing money professionally?
It was a long time in between. So I was probably in late high school, and then I went to college. Was not interested in the market, and went to Arizona State, and to get my citizenship postgraduate school. I wanted, it was post-Gulf War. I wanted to live in Arizona, and, it's much harder probably now to get a green card, but even back then, Gulf War, I just had to get a job and prove, kind of go through the whole thing with a green card or a work visa back in 90. And back then there was no Craigslist or no internet. And so you'd go to the newspaper and circle all these jobs, we'll pay you. And it was just and so I went to work at a stock brokerage doing what someone had done to me, cold calling. So that was kind of, I had to stay in the States, and I had even though I had an MBA and a master's in international management, I was making cold calls just to get sponsored to live in the United States. And that was how I started falling in love with the market. I build up this book of like one-sheeters and value line pages, and then cold call people and try and sell stock over the phone. And not easy to do, especially post 90 recession in Arizona, the S&L crisis. I didn't know enough to even know that it was a dumb idea, but I just fell in love with the numbers and with, I was okay at cold calling. And I just loved the idea of like stocks, and I really just started digging in, and that's, I don't know, 91, but it was almost 30 years ago. And was a stockbroker and was making cold calls.
It's funny. I don't need a cold call to lose a bunch of money on a stock. I'll do that all on my own. So.
Me too.
That's cool. Did you when you were managing money professionally, were you long, short, or what type of strategies did you employ?
Yeah, so 94, one of my cold calls led to an investment company called The Grip, which became like the pet rock of the 90s. It was, and we made so much money. So I got out of the brokerage business to go chase my entrepreneurial dream of this cold call that I made, which was a stress ball called The Grip. And my partner made so much money. It was his company that we just started. It was the early 90s and we started trading because we were just cash rich. And luckily it was a bull market. So now I was on the other side of the phone call, hiring brokers to pitch me ideas while I was making squeeze balls. So, at 1 o'clock when the market closed, I would go work at this company that was growing really fast. And we were trading stocks with our own money, but we had brokers working for us. And, back then spreads were 50 cents on the NASDAQ, 75 cents. People don't remember that. Now they complain about selling order flow, whereas, would you rather have 75-cent spreads on the stock? I mean, people don't realize that's where the spreads went. No free lunch. But I was so in love with, and people trusted, this family that I, backed and now made a lot of money. They just were like, go do this full time. And I got a bunch of clients together, didn't know what I was really doing, and started a hedge fund in 98. It seemed like the entrepreneur, being a hedge fund is like being an entrepreneur in tech, right? Like you answer to no one except the returns on the market. And that seemed like a startup, it really was a startup, but it was really tough, to kind of like compete against the world as a hedge fund. I survived, 15 years doing that, but was never really happy doing it. So it was long, short, but I really tried everything and eventually settled on long-term trend following, which then pushed me even into longer-term trend following, which is, private tech investing, where you're kind of locked in for 7 to 10 years on your good companies, so it's a different form of trend following, obviously no liquidity, but it really fits my personality to just have a point of view and just invest accordingly. And the public markets, I apply the same things, but it's very hard to be a trend follower in public markets because you can see the price every day and you can add up what you're worth. And it's a tough, the markets are not the perfect thing for every personality. And my personality is more like I do better if I'm not looking at prices. Prices have so much data in them and they're fun, but private investing is so much more fun when you're not waking up every day up or down, a percentage. You're just thinking about the long term and a big vision. So it's kind of been a kind of a progression. And now I'm going full circle in that I think the markets of private and public have kind of like come together, with cheap money and low interest rates and with technology, kind of everything's melded together. And now you're seeing it with SPACs, and direct listings and companies staying private longer. And now it's like, it's almost cool to be private.
It is.
But at the same time,
and less work.
It's cool to be public too. So I think we're finally converging where everything's kind of mushing together.
It's an interesting dichotomy that's going on in there, because you're right. Companies are staying private longer. They're even, at least here in the Midwest, they're bootstrapping for longer before they're raising their initial seed investments, right?
Sure.
You're seeing companies, try to go as long as they can until they can no longer, right? And then they, go out and try to raise money.
What I've tried to tell, my job, because I've been on both sides. A lot of people say they've been on both sides, but I've been on 9 different sides of this, from trading to liquid public momentum investing to like earliest stage seed investing. And I think, it's become sexy to say you've got venture capital, but only a few companies really need to be venture backed. Most companies can be bootstrapped, and part of what we do is educate. We're trying to find founders that really understand what we're doing and what they're getting themselves into when they partner with a venture capitalist, because it's a long marriage.
It is.
It's not for everybody. And I think, because of maybe Facebook movie and because of all these giant, $1 trillion companies, everybody wants to be Zuckerberg. Maybe not Zuckerberg as it exists today, but everybody wants to be Facebook or Alibaba or, Google. Not everybody can be. And so you're trying to like educate people on like the positives and negatives of taking outside capital. So I think we're now headed to a place, like you said, where, especially in the Midwest, where venture capital maybe wasn't as established, where it'll revert back to like bootstrapping. And part of the art of a startup, and you've done this a few times, and I've done it both ways, you know, taking money and bootstrapping, hedge fund, et cetera, is that I think what's becoming cool again is how the art of building a company with very little money is like, how do you do an Instagram, like 14 people, no revenue, $1 billion exit versus raising 200 million. You know, part of the art of being a founder is like, how do you creatively get the highest valuation with the least amount of money and employees? That's kind of cool. So hopefully we get to that more in a world of the cloud and open source software. I think we're heading back to a world of, you know, and now you got COVID, which everybody's stuck in their home. I think the artisan digital entrepreneur, and like, it'll be cool to build a huge company out of your house.
Yeah.
And like we're doing with this, like, you know, we're not going to judge people by the office that they, and how many people they employ. And it's going to be it'll be cool to say, like, I built this thing with no employees.
It's interesting. I've seen startups back in like the early tech, like cloud days, do that, where it's completely remote, no office, everything's just through like messaging and you know, meetups. But I haven't seen any like truly large organizations come up that way.
They're starting to GitLab. I mean, they're starting to, you know, Elastic. There's all these like remote started companies that are now getting public or almost public, and uncentralized businesses from day one. And well, crypto is obviously a perfect example. Bitcoin itself, you know, no employees. We don't even know who it is. And it's got one of the biggest brands in the world. That's pretty cool. So in a world where that's happening, like, that's the ultimate other end of it, which is like, who the hell's Satoshi and how do they do this? And who's making all the money? Is it the Russians? Is it the Americans? Is it the CIA? Is it, you know what I mean?
It's definitely the CIA. So.
Yeah. Well, I'm saying, like, we could argue, like, everybody has an opinion. It's pretty cool. It's kind of like the stock market, except no one knows.
Nobody knows. So let me ask you on the topic of startup investing. You were correct me if I'm wrong, a relatively early Robinhood investor.
Yeah, we were seed when we invested. I had met part of one of the edges that I would say I have, and we could argue. I can't quantify if I truly have an edge, but you're an investor with me, so you kind of have taken the leap of faith yourself. Or bought into, or believe, or are smart enough. We won't know until we add it all up at the end. But part of my edge, I believe, is my network and my passion and domain experience around trading and investing. And I think in the past, it was like, how big of assets were you managing? And like, are you on CNBC? And do you wear fancy shoes and have homes in the Hamptons and are busy all the time? Versus today, it's like, you know, back in the day when farming or America was a different type of pre-digital or you know, industrial age, where it was how much land you owned. You couldn't tell who a billionaire was. You wouldn't know if he was a farmer or a billionaire. And I think we're getting to that stage digitally right now.
Absolutely.
Where you don't judge a person by like their office or what they're wearing or, you know, who they hang out with. You can't tell, again, which is kind of cool. Yeah. And so my edge, I think, is around, I've been doing, whether I'm good or bad trader, I really know what I know. And I just want to continually invest in the industry that I know. And I'm focused on things that would make my life as an investor easier. And so when I started StockTwits, it was inspired by Twitter.
Okay.
It was inspired by my disdain for CNBC and media, you know, before we were calling it fake news, you know, 2004, 2005. And I couldn't afford Bloomberg, you know, I wasn't going to pay $2,000 a month, and I didn't read the Wall Street Journal. So I was like, how does a guy like me be on Yahoo message boards get information? And Twitter comes along and inspired me to kind of build Twitter for finance. FinTwit is what they call it, but we built our own platform called StockTwits.
Yep.
And 12 years later, we are the home of, millions of traders and investors, lifestyle and professional, call them individuals. And because of that, I got good flow. I don't just have good flow of sentiment and opinions. I have good flow of founders who want to show me their product because they think, we can help them because of our distribution and our brand,
Yep.
et cetera. So, I just put on the hat sideways and put on my long-term hat and realized that I had a seat that many others didn't have. And if I was willing to write checks, and which I did, I could get a seat at the table of, 50, 100 of these companies aiming to be the next Bloomberg and Wall Street Journal, et cetera. And that's what I did. In 2005, I just started writing checks to change the world, conform to how I thought the world should work for traders and investors. And so Robinhood came to me. They had a different app. They were struggling. It was called Chronos Research. They had built like a social network, a social app, and it wasn't working. And they were high frequency traders. So they were really smart guys. And they just figured out if we put a front end on what we've learned about high frequency trading, and we could bring the commissions, front end and a good design, we could create a free commission brokerage. And they pitched me, and I immediately was hooked. I didn't have the nerve or the knowings or, back in 2013, when they pitched me, being a broker was not something anybody wanted to do, right? Everybody was hacking. Yeah. Everybody wanted to be Vanguard, right? It was like, we don't need to be a broker. I don't want to be a broker. There's too many regulations.
Like a robo-advisor.
The world of Uber was like, don't ask for permission, just fucking do it and pay fines later. You can't do that in US financial markets. So what the hack was for the venture capitalists, and it was a little lazy, and I think they got wrong at VC scale, is they all wanted to be the next Vanguard. And I never believed in that model. I was anti-Vanguard, not as a company, just like Vanguard works. Like you can't build a 10 times better product than free, which is basically Vanguard at scale. So yeah. I was zigging while they were zagging. We were StockTwits, and we were all about individual stock picking and having fun and trying to beat the market. I don't even know what that means, beating the market. We're seeing that now, right? Like that means nothing. But I was all in on do-it-yourself investing. And so the idea of a brokerage in a box and software was just the right time, right place. They built the right product. And, we invested in 2014, a couple $100,000, and it was an 8 million valuation. And people really thought we were nuts, but I really believed the minute we wrote the check that it was going to be $1 billion company. I didn't know if it could be at 8, today there's on paper 8 billion, but that's the way we're all learning. Whether it's DocuSign, no one thought it could be as big a company as it could be, the market cap. I think in a digital cloud era, what we're learning is these companies can be much bigger than anybody imagined.
Yeah, they can truly scale. So let me ask you.
And they were truly outside the spreadsheet. Wall Street is really an Excel-based industry and an asset and leverage-based industry. And now we're leveraging the cloud, and we're leveraging imagination and creativity, which is brings us full circle to why there's SPACs today, is because Wall Street can't grasp what these entrepreneurs are coming up with. And there's no assets involved, right? You hook up to Azure, you hook up to Google Cloud, or you hook up to AWS, and you're in business. 99, you had to do pets.com, you needed $10 million for servers. To do pets.com 3.0, you don't need anything. You just need a website and some Facebook ad spend, and you test and you figure out if you can ARB, customer acquisition. So we've really, blown through Wall Street. Wall Street kind of hurt themselves with their behavior and with leverage. And then Bitcoin comes along, and now angel investing comes along, and now direct listings comes along. And we're slowly seeing what I thought, couldn't have predicted this, but it was what I was investing. Everything I disliked is still around, but you can beat them using free software, which is pretty cool, which is, I guess, the original vision.
I mean, it's. I'll tell you, like having started TrendSpider during this time, it's.
And I knew it. I called you right away. I go, I love what you're doing. And
You did. You did, but the point I want to make is it just blows my mind because when we were doing like mid-phase and single hop back in the day, right? Want a billing system? Write the code, right? Find a payment gateway. You want a phone system? Buy the box, buy the phones, right? Everything was, had to be piecemealed and built and glued together. Now it's like Ring Central, Grasshopper, right?
Twilio,
CRM, there's 50 choices.
Right.
So it's a completely different world. I'm with you there. That is the future there.
Yeah.
Let me ask you, during the COVID time, right? So like the last like 3-4 months, right? Like 4 million new traders opened brokerage accounts.
Yeah, I wouldn't have predicted that. I'm a little bit lucky there, but
blew my mind too. What do you think is driving that? Is it just the government money?
Well, first of all, what's driving is the stock market's a game. Like, I don't like saying that, but let's face it. The fact that we're playing a multiplayer, multi-dimensional, multi-behavioral, off the same data set, right? Price, which is large data and small. I mean, it's fascinating, but we're Fortnite 24/7, 365, no coders. It's just my brain against your brain and my will against your will and my pockets against your pockets and my knowledge of, or my imagination against your imagination, and anybody can play. It's like, why did poker take off? Why did, first of all, you either like poker, you didn't like poker. I don't like the grind of sitting at a table, but that's why did online poker take off? Because a fucking peasant in Bangladesh could go up against a CEO of a Fortune 500 company and clean his clock, because they're sitting at the same table. And I think what we have with COVID and the markets is, and Robinhood and StockTwits and Reddit and Telegram and you know what I mean, and TrendSpider and you have unbelievable access, you have time, you have liquidity, you have mentorship, and that's a perfect cocktail for people trying to make a buck. And so everything's just sped up, and we're just gaming and finance and sports are kind of all intertwined. And it's just, I wouldn't have predicted it. I mean, I always thought that more people would trade, but we needed a trigger, because eventually my kids get the money, your kids will get the money. Mm-hmm. We may hate our kids, we may love our kids. They could be Trumps, they could be Bidens, we don't know, right? Like, they could go, they're going to make mistakes, but eventually they get the money, trickles down. And my big vision is the next generation will be an investing class, meaning, it'll come from putting money to work creatively, right? Less from production and less from marketing. Not less from marketing, less from, manufacturing, and less from the ground and more from the cloud. And so in that world, the faster kids learn to invest and develop a style of how they're going to manage money, because that's what's going to separate the next generation, is how well they invest. So this was a onboarding moment for the next generation, and we can argue about, will they stick, or is it good, or is it bad? I don't know, but odds are, once you get the bug, once you onboard 30 million people, a certain percentage are going to stick, and then of that certain percentage that stick, they're going to want tools. Mm-hmm. And so I just need to think through, if they have tools, like what are the modern tools that a young person would need?
Yep.
And that's kind of what I'm focused on. So I wouldn't have predicted it, but I'm super bullish on this not going away, because it's a lifestyle, and it's a pretty good lifestyle if you get mentored properly and you invest properly. It'd be pretty crazy to tell someone they shouldn't do it is ridiculous. To tell someone they shouldn't buy a gun and smoke is ridiculous, because it's just it just is. Mm-hmm. You could argue all day, but to tell someone they can't buy Facebook or fractional share, and then you have the fractional ownership, which just kind of should have been around 20 years ago, but it's finally here, and everybody can do it. And then you have the international world that wants to own US companies.
That's a big thing.
It's a big thing. Like, so
Yeah, I'm
everybody
learning
that
about
thinks,
that lately.
so everybody that thinks this is a bubble, it is in some levels a bubble. There's always bubbles, but at some level, this is the earliest days where, you know, if you're in Singapore, you can't buy US stocks. If you're in Germany, you can't go buy Facebook. And so we're an area where people around the world are going to want to be able to buy fractional shares of the companies they want. We're buying Tencent and Alibaba. Why can't the people in other countries buy Facebook, Microsoft, Twilio, etc.?
Makes sense. Do you think the market's acting rationally?
It never does. It always does, and it always doesn't. I think at some massive scale, it's acting very rationally, right? You have all this money printing. You have very few pure digital, incredible companies that don't have to print money, right? So in a world where the government's just printing money around the world, Apple, we could argue about the buybacks forever, but in a world where Apple isn't infinitely printing their stock and doesn't need money or can borrow it at 0%, a share of Apple is a rare asset, or a share of Amazon is a rare asset. And it produces cash flow. So it's not just gold, it produces cash flow and is a badge of honor. So in a world of rare assets, I call them rare digital assets, I think it makes sense. You know, what are they worth? I don't know. I'm not going to argue about, you know, I'm a dumb trend follower, but and people getting out of Disney and Carnival Cruise Line and airlines makes total sense to me. They're shitty businesses.
They are.
And they've used the public they fleece the public over and over again to build conglomerates to hide the fact that the core business is shitty.
It is.
So if I'm a new investor, I just want to know, if I'm buying Disney for Disney Plus, shouldn't I just buy Netflix and own the piece of the business that I like? Meaning, so until Disney splits off or until Netflix has true competition from a stock perspective, if someone wants to own streaming, they're going to buy Netflix stock. If someone, so we've gone from an era of conglomerates on land to an era of conglomerates in the cloud. But now you're probably going to see a lot of like the Twilios and Shopify's, these new conglomerates kind of underneath the conglomerates. And that's kind of where I'm focused, is like, who are the next planets? You know, is it going to be Twilio, or is it going to be Peloton versus Lulu? And all the acquisitions that come with it. So I think it's behaving somewhat rationally, kingmaking. And then irrationally is it's been completely politicized. No one wants to take the pain of a true bear market. So I think part of the fun that's taken out of this game is the government's kind of become in control of the market at some level. And you're betting,
prevention team.
Yeah, you're betting on when they'll flinch. And that kind of takes the skill out of it a little bit, because
they don't really flinch.
It feels a little bit rigged.
Yeah.
So that part I dislike. And that's why I like private investing more, is like, it's truly the skill of picking and riding these things and building something. And I think that's why private investing has caught on as the public markets have gotten more politicized post 2008. But starting earlier with the plunge protection team in '98, I think people feel gypped. So it's obvious to why private markets have become so interesting. You have all this money, you have all this knowledge, you have all this new industry, and the public markets are a bit of a joke because of the politicization of it. And therefore, we're going to have to fix that to make the stock market a healthy place for true price discovery. And COVID kind of brought back a little price discovery, and that's what you get. When you get price discovery, you get volatility.
Yeah,
we've been VIX over 30 for months. And, you know, that's pretty amazing.
It's a lot of fun if you're trading it.
Yeah, it's a lot of fun. It just doesn't make a lot of sense to a lot of people, so they're yelling. But this is what you wanted. You either get calm or you get volatile. I prefer volatile.
I personally do too, you know, but I
think
think
less rigged. The more volatile, the less rigged it feels.
And I mean, price discovery is the product that traders sell. I mean, it's why this is even a thing.
So it could last 20 years. Therefore, I'm super bullish on the markets. I don't care if they go to 2,000 or 100,000, as long as there's price discovery and volatility.
Fascinating take. That's really interesting.
Yeah,
I didn't actually look at it that way.
And I think, there's a new discovery of mine, because nothing's static, is that when we invested in Robinhood, what got me excited about it being $1 billion idea was, okay, well, people want choice. It's Uber of trading. What makes me excited, more bullish today, forgetting price for a moment on Robinhood, is, well, now they have 10 million users, and now millennials know that owning 500 S&P stocks is the stupidest fucking scam. Pardon my French. Why do I want to own, when I walk into Walgreens and I'm like dizzy from looking at the Band-Aid aisle where there's 500 choices, I really only want one Band-Aid. So when I'm investing, if I want fitness, I want to own Peloton or Lulu. I don't want to own a conglomerate that has a fitness division. Mm-hmm. And so I think we're going to have this unbundling of the S&P, which happens all the time, bundling, unbundling. So I think part of the market cap explosion in finance finally is that Vanguard has just been this monopoly, and Wall Street's kind of been humming this like 60-40 and just set and forget. And, you're diversified with 500 stocks. And I believe, we're seeing that you can be diversified with 5 companies, right? They're 23% of the S&P. So just buy those 5 and then pick 10 other companies that you think could get to that category.
Moonshots, right?
And you got a diversified portfolio. Why do you need to own Nokia and Carnival Cruise Line and an airline and an energy company and a beverage company?
It's fascinating. If you look at
that would be drag. Kids don't like drag. They're carrying around a phone and they're wearing Lulu and they have one pocket and they don't want to have a lot of stuff. And that's translating into the market too. They don't need 500 stocks to feel diversified.
So what I wanted to comment there, if you look at Robin Track, which is a website that tracks Robinhood, it's painful because it's like, Carnival Cruise, Hertz, bankrupt Hertz, right? These are like top 50 holdings of Robinhood accounts. They're like 40,000 Robinhood accounts.
So how is that different than a stockbroker calling me in the 90s or 80s to buy a beverage company, right? So people are going to do stupid things. So you give people weapons and they're going to do them. It's like you give them Twitter, they're going to send spam or send hate. You give them the stock market for free and they're going to do stupid things. Part of this is that culture of, it's like their version of dare, right? I'm going to buy 100,000 shares of Hertz because I know that it's kind of like Wall Street. I know that in 2 days, there's a bunch of other dumb millennials that are going to buy it at a higher price. So it's a game of chicken more than it's a digital game of chicken. They know that it's bankrupt, but they also know that the way information asymmetry works is that the other idiots, they'll sell it to another idiot in 2 days. And as long as they know there's liquidity, they're trading it. So right or wrong, I agree, it's stupid. But they're just playing their own version of chicken. And some people are going to get burned and then they're going to go back and either quit or they're going to get smarter and stop doing that. It's like fire. They want to light matches and set their ass on fire, they're going to do it. So Hertz is just part of the learning process. And to be honest, they learned a quick lesson, right? Hertz tried to scam everybody and do an offering. And guess what? That got shut down. So the real scam was Hertz was trying to fucking capitalize on that nonsense.
Yeah. Can't blame them. Opportunism is what drives.
But that's what I'm saying. Where do you draw the line on who you're protecting, right? Like it's just chaos, but people have to learn. So I don't think you can regulate all this stuff, right? Like it's a Pandora's box. It's not a perfect situation, but at the same time, man, fooling his money is part of the business. It's a game, and if people are going to try and break the rules, they're going to get hurt.
That makes sense.
Yeah. So I don't know. But those are the things. I think the faster we get people onboarded and educated, the better the game becomes.
The quicker they learn their lessons, the better they'll be, right?
Yeah.
So we're running low on time, so let's wrap it up here. I got one final question for you. And I ask everybody this, but since you're the founder or co-founder of StockTwits, I'm going to ask it to you in a special way. What advice would you give a completely new trader or investor looking to get into this as it relates to social media in their trading? Should they listen to it? Should they tune it out? What's the right way to use it? Because a lot of people use it wrong.
Right? Yeah, well, most people use it wrong. Otherwise, there wouldn't be an edge. So there's like an incredible edge. So the first thing I would do is definitely open a free brokerage account like a Robinhood. Because whether they're selling order flow, don't get paranoid about that stuff. I mean, lower your costs, right? And by lowering your costs, I mean, yeah, okay, so you're paying an extra 5 cents indirectly, probably somewhere. But I did find with 75-cent NASDAQ spreads, I still love the business, right? So no matter who's selling what to who, you're seeing real prices on your phone. So build a watch list. Fill that watch list. So open a Robinhood account, fill that watch list with 20 companies, brands that you fucking adore and live with every day, and just start watching them for 3 to 6 months. There's no rush. Or buy one share, or put $500 to work across 8 to 10 companies that you just live with every day. Whether it's Lulu or Nike or Disney or Netflix or Google or Amazon or Tencent, and just watch the prices and start to get a feel for the mood of the market. Then I would, obviously find a few friends that use social media for financial and find out who they follow. And then to speed through everything is just like you would take a Udemy class or a Khan Academy or go spend money at college. Say, I'm going to put $500 a year into being mentored, like a coach, like you would a psychologist, or you would a therapist or a golf coach, and say, I'm going to pay for the best, and I'm not going to buy into this crap. Well, if they were good at the market, they would just be trading. No, there's hundreds of great mentors that may not manage money, but are happy to, for $100 a month or $50 a month, share ideas and coach you. And so pay for mentorship. That'll speed you through social, like pay to play. Right? There's that thing, pay to play, and everybody's used to free. Go around the free, borrow money from your parents and invest in market education, and try and speed the 10-year life cycle of learning cycles and business and ups and downs, and try and speed that up to 3 years, maybe 4 years or 2 years. Depends on how good you are or how natural your ability is, or finding your style and finding the mentor that helps you invest is key. And so those are like the simple things that I would do, like don't pay for commissions, think longer term, and then find people that are smart and then draft behind those people and ask for and pay for mentorship.
That's good advice, Howard. Thank you. I'm sure a lot of people will appreciate that. One last question. I think some people watching might be just curious about that kind of same question, but going into, starting a VC fund or an investment fund, there's a lot of ambitious people out there. If somebody was like just new and was like, hey, I kind of want to become an investor, invest in startups. Yep. What advice would you give them?
It's a great question. It's something that I think about all the time, because how did I do it? I luckily had some money and I could ask favors and beg and borrow. But, the only way you learn is by writing checks. And that's whether it's $100 investment in Google on Robinhood, or you want to put $1,000 in a startup and go on Angel List. But the first thing you do is start a journal and act as if, because it's free to write and you don't have to share it. You can keep it like a private journal if you want, and start building a model portfolio. Start timelining what you were thinking and which companies you would buy if you had the money. Because at some point, if you're good, that's your resume, right? So there's a lot of kids now being hired in VCs that didn't go to Harvard, didn't invest their hard-earned money, because they clearly wrote what if they had $100,000, what 10 companies they would have invested in. And they have WordPress or Medium or Twitter, and that's digital footprint of what they would have done. So a fantasy portfolio, it's never too early to start. Okay, so if you were wrong, you don't have to share it with anybody. But if you really want to break into the business, start keeping track of your investments, even if you didn't make them, by writing it down and keeping yourself honest. And I think the journal would be I probably forgot to say this in the last question. The last is write the shit down and hold yourself accountable. And that pays dividends. I've been writing forever, but it's fun to look back and see what I was thinking. And I just go, I can't believe I missed that, or I can't believe I was right and sold my shares. So I'm super, I believe in the fantasy portfolio for private investors. So if you want to break into business, write it down, read as much as you can, try and figure out which trends are going to be around, and then someone will discover you. You will get discovered.
That's amazing. Thank you for sharing that, Howard, and thank you for being here. I think we're a little over time actually, so we're gonna have to cut the segment off.
Cut it out.
I wish I would talk to you. I would talk to you for days, man. I want to get together and have some beers together because we can have some fun.
We should get married. My wife doesn't want to talk to me. It's fun. That's the traders' problem. They're all like this weird group that no one else wants to talk to except we just can talk all day.
Degenerates are good with other degenerates. So, well, I really do appreciate you, Howard. Thank you for being here. I hope everybody enjoyed this. And back to Jake.
All right, guys, time for some chart requests. Dan and Howard, thank you so much for that interview. That was awesome. Let's jump into DKNG, also known as Donkey Kong to some of you, or at least that's what it looks like every time I look at this ticker. So we've got a falling wedge on the daily that broke out last week. And notice what happened. We did break through the anchored VWAP, and I did anchor that VWAP from this big engulfing candle here. Notice what happened on Friday. You've got this pullback, and then you've got this nice bounce. We'll have to see what happens into next week. But then if you look at the weekly candle and we anchor that volume by price from this March low, you'll see that we do have a supply zone above right around $40. So not only is that supply, but it's just a psychological level to get through. So if this does break, this supply zone could quickly become a demand zone, and we'll just have to see what happens into the week ahead. Going into Cron, this is one that really had some action in the last week or so. You can see here on the daily chart, we are kind of still trading in between these two resistance zones. It did get rejected pretty hard on Friday. However, we do have this rounded bottom forming. And then if we go to the weekly, which is kind of the thing that I'm looking at the most here as just trading this personally, you've got this massive supply zone here. So it's not a shock that we did have some selling into the end of the week. And so as we just talked about on DKNG, if this area that acted as supply becomes a demand zone, this could easily act as a launch pad. Notice I've got this weird kind of double head, inverse head and shoulders, but it looks kind of cool. I got to admit, it looks like a weird bird or something. But anyways, will this actually be the right shoulder? We'll have to see. But this is definitely one of those longer term move downs that is starting to try to kind of catch a bid. And if we anchor that VWAP from the top here, this would be around $10.24, give or take. Obviously, this is going to move with price, but it does show that we are way below the average volume weighted average price, i.e. the average price per share someone's traded, that everyone's traded since this point in time, as taught by Brian Shannon at Alpha Trend. So that is something to keep in mind. Going into CGC, another marijuana play, pretty much the same kind of thing here. I did want to mention that we had this big volume shelf forming. Essentially, we had this symmetrical triangle, and then finally the price just broke really hard through it, and now it's kind of stair-stepping up this volume profile here. So will it kind of continue to move up? We'll have to see, but we do have a very similar setup on the weekly chart as we do with Cron, where we've got this inverse head and shoulder, except we've only got one head here, not two. And then we do have this supply zone above, which will really be the deciding factor in which way this moves over the next couple months. So this is about 19 to 21 or so. So that would be the area where supply is really most. So going into the week ahead, we have had 3 weeks in a row And we'll just have to see if we have another green week or if there's a pullback. Tesla. This is one that's really, I wanted to pull up the gap snake here, and then it will turn off the volume by price. Look at how many gaps are below. This thing looks like Swiss cheese, and anytime we have so many gaps below, it is a little sketchy. Notice we've got this kind of interesting pennant type looking thing forming here. And so, this is going to kind of be a status quo changer once this breaks to the upside or the downside. And then if we pull up the weekly chart, turning off the volume by price, you'll see that we almost tested this 2.382 level perfectly. This is an extension of this original measured move from around 970 down to 350. And so notice that we did not actually touch this area. However, if you would have had an alert set with this sensitivity, notice that we would have actually been able to capture that zone. So this is why the sensitivity feature is so important. You're never always going to have a precise, perfect touch of anything. There's going to be some margin of error there due to just liquidity, due to impulsiveness by someone. Maybe they just placed a big market order and it moves it above a specific area. So it's always nice to draw these areas kind of like this, right? More of a zone rather than an actual just one line type of thing. So that is Tesla. Definitely a big move coming. We don't know which way. We'll have to see. But looking at all those gaps below, it is something to keep in mind for sure. And if you haven't used the gap snake before, you should definitely try it out. It's one of the most powerful features on the platform. One thing that I want to go over on Tesla is the new analyst earnings feature or analyst estimates feature. So notice here, let's take out the news. And really, we'll just keep seasonality and earnings estimates. So notice here, in June for Tesla goes up 80% of the time in June. So that is something really important to know. Notice that in July, Tesla only goes up 36% of the time, and that's from about a decade worth of data. So something definitely to consider, that this isn't always the strongest month for Tesla. And then you can see it doesn't really get strong again until November with that 70% positive rate. And then we do have the new earnings, I keep saying earnings, analyst estimates here. So let's say that I want to highlight, Wedbush. I want to highlight Credit Suisse. I can then go to this events button. When I click it, you'll see that all of these different things that I just highlighted here will show up. So notice here we've got a sell signal here on May 4th. And clearly the person who put that sell signal in has no idea what they're talking about because this thing ripped almost double from that sell signal. So this is a really cool tool to be able to essentially validate analysts to see if they're actually worth their word, or if, you can go and back test them and say, oh, wow, this person hasn't been right in like 20 years. Maybe I won't trade that. Maybe I'll just use them as a contrarian indicator. So that is something I wanted to show. As you can see, S stands for sell. This is a sell by the analyst. H stands for hold. And then obviously the B stands for buy. So something you guys should definitely check out. The dev team put a lot of work into this, and it really makes these fundamental things part of your technical trading. So definitely add it to the things to check out into next week. And let's move on to, what do we have next? Amazon. Oh, Amazon. Jeff Bezos didn't already have enough money. All right, so Amazon, we've got the daily chart here. Notice that we anchor this VWAP from this kind of hammer here, essentially a pivot before the next move up. And then over the last few days, at least 4 days last week, there was pretty much a respect of this anchored VWAP. And then as you can see here, if I can turn off the sidebar, that the 2.618 extension was almost tested perfectly in on the weekly chart. So will this kind of be the make or break for Amazon, at least short term? Is there rotation coming to a tech sector near you? We'll have to see, but that is not necessarily a candle that I'd like to see. However, if we highlight the last time this type of candle formed, it didn't really mean a ton. So we'll have to see what happens into next week, but those are the technicals on Amazon. You can always, let's say you think this thing's absolutely going to crash. you can put an alert on the 1.618 below and have some margin of error around that to capture if it does make a big move down quickly. And, then you don't have to stare at the chart the whole time. However, this anchored VWAP is the main thing to watch into next week. If it holds, great. If it doesn't, we may have some more pain ahead. And then if we did get an idea of where that may be, if we use the anchored VWAP like Brian teaches, we can anchor it from here. Then we can either anchor it from this point here and then anchor it again. Notice how perfectly that acts as support for this candle here. So if this did break down, we could move back down to the 27s, 2800s, which is where that anchored VWAP would be, which is a level of interest for buyers below. Going into Walmart. Walmart was one we talked about last week. Huge breakout, but really not doing a ton anymore. It's just kind of stuck. And then you can see on the longer term chart, the reason why it may be stuck is because we are hitting this resistance above. And it's only resistance until it's not, right? So the price could easily break through this and it's not going to be resistance anymore. But until then, it is a level of interest for the sellers. If we anchor the volume by price from this May 2018 low, you'll see we did have that launch pad last week that really held up from selling off and then acted as that launch pad moving to the upside over the last 2 weeks. So Walmart, we'll just have to see what happens, but let's look at its brother here or sister, Target. We've got Target here forming a really nice pennant. Notice that it was rejected once again on Friday. However, you can see here, if we anchor the volume by price from this low, look at how much volume is holding in this area. We're having this kind of massive volume shelf forming with an inverse head and shoulders on the weekly. So this is something to definitely keep in mind. We never know where the price is going to go, but we do know what the technical levels are to watch, and that's what technical analysis is all about. Going into BYND, haven't talked about fake meat in a while, so we might as well do it today. We've got this daily candle here, really respecting the anchored VWAP. This is an example of the anchored VWAP where we do add some of those percentage offsets. So remember, if I just wanted to do the anchored VWAP without any type of margin of error around that area, I would just go to bands and turn off no band or turn it to no bands. And notice that we've got a nice even line here. However, we do sometimes want to add a little margin of error. So you'd essentially go to percentage. And then notice here, I've got a 7.5% offset to the upside, and then a 7.5% offset to the downside. And so you can see, once we do that, how much more price action the chart is then taking into account. We've got this dip here that really caught a bid. We've got this dip here, this dip here. So there are times where you definitely want to use those percentage offsets because there is some volatility within some of these more kind of crazy volatile names. On the weekly, we've got this massive broadening formation, kind of similar to what we just looked at Target. Notice that a lot of that volume is really creating this volume shelf here. And, that means that most people are break even at this point. So if the price continues down, this whole chunk of volume is going to be holding at a loss. And so as people continue to get bigger losses, sure, you're going to have some people sell, but a lot of those people are going to stop selling because they're not in the profit anymore. And that dries up the supply. And if demand remains constant or demand starts to outpace that supply, we will move up. So that is the economics lesson for the day. And we'll just have to see what happens here. But a huge volume shelf forming on the daily or on the weekly for BYND. Going into United Airlines, airlines in general are really just trying to figure out what the heck they want to do, or if anyone's going to fly ever again. And the answer to that, I think, is yes. Everyone likes to fly, as Dave Portnoy says, we fly in this country. So just quoting him there. We do have the anchored VWAP from this May low. Notice how perfectly the price closed on Friday right at it. And then if we do anchor the volume by price from this bottom, you'll see we do have a lot of that volume forming this volume shelf right in this handle of this cup and handle. So we'll have to see what happens into the week ahead, but we do have a nice volume shelf forming on United Airlines. Last one is PIN. Speaking of Davey Day Trader, let's take a look at PIN, see where it's at. And this is a cool chart because what I did here was I actually drew this line without log scale on. So notice that it's completely linear here. And look at how nicely the price bounced off of it last week. And then if we turn it to log, you can see it curves due to just the log scale. And so, will this retest resistance? We'll have to see, but we do have another inverse head and shoulders with this big volume shelf forming. And you can see a lot of buyers are holding here, and or not buyers, but just overall volume distribution is really heavy here. And we'll have to see if this acts as a volume shelf going into the week ahead. So that is it for the chart requests. Thank you everyone for mentioning the stocks that you'd like to see on our Twitter post on Friday. And we really only have about, X amount of time for these. So I wish I could do more. It's just kind of a time restriction. So hopefully this helped. Everyone have a great week of trading, and have a great rest of your Sunday night. Have a good one.